Hello everybody. In the current affairs this week, the week ended 23rd of November 2025. The US and the global markets were experiencing a significant correction in the month of November 2025. The S&P 500 was down by around 3% and Nasdaq was down by around 5% in this month. The key reasons for this correction were companies have spent around $1 trillion in AI infrastructure. The return on investments on these kinds of huge investments is what is unclear, and that is on account of the kind of productivity gains which might get done on account of AI are uncertain. Hence, the valuations seemed to be expensive. And in the US market, the important part to understand is that the US market is driven by the Magnificent Seven. By Magnificent Seven, as we know, the stocks of 7 top companies which are basically right now pursuing AI, artificial intelligence, so very strongly are the drivers of that market. These companies are Apple, Microsoft, Google, Amazon, Nvidia, Tesla, and Meta. Why I call them as the ones who drive the market is on account of the fact that 37% of the market capitalization of S&P 500 are these Magnificent Seven companies. To understand the importance of it, not just from the market capitalization point of view, but from the earnings point of view, in the year 2024, the entire S&P 500 earnings came from Magnificent Seven. And the balance 493 companies delivered a earning of minus 1.3%. So these 7 companies are the drivers in terms of earnings for the S&P 500. As of now, the forward PE, price earning ratio of Magnificent Seven companies for the year ending 2026 is 31, and the market sees it as an expensive valuation. This valuation given to this Magnificent Seven is on account of the expectation that their earnings would grow by 15 to 17%. Any change in the earnings trajectory of these companies or lowering of these earnings could lead to a significant amount of correction in the valuations of these top companies. When it comes to the global markets other than the US, they are also driven by the AI boom. On one side are the companies which are driven on account of the AI boom, and on the other side, all other stocks. So the future of the AI is going to drive the global markets. In India, the story is quite different because we don't have practically any AI stocks which are listed on the Indian stock exchanges. As far as the Indian stock market is concerned, Nifty 50 was modestly up by 0.61%, Nifty Mid Cap was down modestly by 0.78%, and Nifty Small Cap corrected quite significant by more than 2%. FIIs were very modest sellers to the extent of 188 crores, and DIIs were buyers to the extent of more than 12,900 crores. The best performing sector this week was Nifty IT, which was up by 1.61%. And the two underperforming sectors were Nifty Metal and Nifty Realty. Both were down by more than 3%. Brent crude declined by 2.84% this week. Gold corrected by more than 1% in India, and silver corrected by more than 5% in India. The US dollar vis-a-vis the Indian rupee reached to its highest level. $1 US dollar to Indian rupee is now 89 rupees and 64 paisa, which is the highest level for the US dollar vis-a-vis the Indian rupee. Nasdaq corrected 2.71% this week. S&P 500 corrected by around 2% this week. MSCI China corrected by 5.5% in just 1 week. The reason for correction in the US dollar is attributed more to the expectation not materializing on the US trade deal. Any good news on the US trade deal front will be now the drivers on the Indian stock markets and would lead to the strengthening of the Indian rupee. These days, we come across through a lot of initial public offerings, IPOs of tech companies. And every time when a tech company comes to the market, the valuations of these tech companies at which the stocks are offered to the public comes under a lot of discussion. And in so many of these IPO-led companies, which are tech-driven companies, the valuations seem to be quite high on the basis of the price-earning multiple on a trailing basis and even on a forward basis of at least around 1 year forward basis. The case in point which I would like to discuss this week is a company in Brazil which is Nubank. This company is right now in Brazil one of the top companies in terms of market capitalization. The interesting part is that this Nubank in 2021, its price earning ratio was minus 263. In 2022, it was minus 52. In 2023, it was plus 38. In 2024, the PE was 25. And today in 2025, on the basis of the results of quarters declared till September 2025, the PE is 30. So the trajectory of this company, which started at 2020 in 2021 at minus 263, is now 30 PE. The reason why I'm comparing it with the new age tech-driven companies in India is that interesting part that this new bank is a bank with practically no branches. It is a company which is absolutely driven by technology and no physical infrastructure. So this is the strength of companies which are tech-driven and the way they can expand multifold. That is all for this week. Thank you.